My name is Nicolene, and I will be presenting your class tonight together with my other colleague on study unit 16 for non-profit entities. I would first like to say thank you for being here tonight. And for those of you that is not yet done with the course, I really wish you all the best and just keep on trying. Don't give up. Just take it step by step. And I really want to encourage you all to just make, if you don't, if if this semester didn't show your grades that you expected, please just continue, and really want to encourage you to make use of all the UNISA portals available, such as the social media chats, WhatsApp, Instagram, Facebook. And then obviously, I think the big one is My UNISA, which I think is such a great initiative from the university to help the students. I think it's probably one of the best in the world, but if the student participation isn't there and the questions are not asked, I think you will struggle. I think I find it difficult to study online, but with a tool available such as My UNISA, I think it's a great platform to um ask and just never ever be or feel the dumb or stupid that you ask a question and everyone is supposed to know it and you don't. There's nothing as a dumb or stupid question. So please never feel shy to ask. So my colleague, I'm going to share the slides for our session, and then my colleague will do the study unit 16 part. There's 4 required sections, and it was section 1, 2, 3, and 4. You will be doing part 1 and 2, and I will be presenting 3 and 4. I think I've made a few first slides. It's not specifically related to NGOs or non-profit entities, just like basic principles. I think where we all get lost sometimes in all the detail, and we sometimes just forget to go back to the real basics of accounting. And I think for me, there's just really a few golden rules that I took from varsity up to my corporate career where I am now to explain or understand a difficult or technical question. And it's these simple principles that will really help you to do all your questions. I think the rest, if you go into much detail, you sometimes miss this, and then you start to struggle. And I've seen it with some of the one-on-one classes that I've assisted the students with. So I think it's just saying your assets is always equity plus liabilities. That equation needs to work out. For every debit, there's also a credit. A journal always needs to balance to 0. You can't have a debit of 100 and a credit of 80. Then your journal's not balancing, and then your books won't balance. So that's key golden rules. And then I think assets, if you increase an asset, assets are things like your cash, your property, plant and equipment, inventory, debtors. If that increase, it's always a debit. If it decrease, it's a credit. Things like liabilities, where you owe someone money or you owe the bank a loan, you owe someone, so it's a credit if you increase that borrowing. If you start to pay it off, you debit that liability. And the big thing for me is I love a T account. T accounts really makes your life so much easier in all the journals that you do. And then equity is if you increase equity. Equity I see as if you have a company and now you need to invest some of your money into your company, you start with raising shares, and that's share capital. So the entry there would be debit bank, because your company will get in the cash and you will credit share capital, the equity account. So you increase your equity. If you decrease it, so if you buy like your shares back, you debit that. And then same with income and expenses. Income is if you get revenue in from the stuff that you sell, if you have your own business, you always credit that if it's getting higher and higher and higher, if it increases. Expenses is always, if it increases, it's a debit. So these are like my go-to things that I just always take with me when dealing with any accounting situation. Then this slide I just made so that you know, like, if you have to present company financial statements or even an individual natural person financial statements, like the key statements is your statement of financial position, your statement of changes in equity, statement of profit and loss and comprehensive income, and your statement of cash flow. That's like the major ones, and then obviously your notes will follow. um, and then I just made one slide here also just to explain. So how does all of this language that we talk about, like journal entries and trial balance and statements and all of that, fit together? So if I had to explain it, if I had my own business, let's say I have one of my one-on-one sessions was with a guy, and we spoke about a biscuit business. So we're baking cookies or biscuits, and the main source was, okay, so now it's day one, and now you're starting your business. You get some funding to start your business. So you maybe issue a few shares, and a share certificate, as an example, would then be source documentation. Now, if you start to go buy your flour, your eggs, your milk, all of the ingredients, that would be inventory. And that's all source documentation to make that journal entry to record your inventory. Um, and then obviously it will reflect on your bank statement. So that's also source documentation. So then from your source documentation, you start to prepare your journal entries with your debits and your credits, assets and liabilities, etc. And then from there on, you get your general ledger. Now, how I really understand how this makes sense to me is you have your books with all your journal entries, or your accounting system with your journal entries. All of that will then get into your general ledger, your T accounts. So there's maybe like 10 journal entries in one inventory general ledger account. And then from your general ledger, you have close off balances, and your balances will then be reflected on your trial balance. And your trial balance is your main source to prepare your primary statements. You only use your trial balance to do your primary statements. Um, yeah, okay, then are there any questions so far? If you want to, you can raise your hand, or yeah. I think then if there's no questions, then we can maybe go into the today's exercise. Yeah, I think a few things that I would just like to highlight on this specific question. It's revision exercise 16.10.2 for study unit 16. And here again, I said keywords that I picked up when I looked at the question or even the study unit was receipts and payment statements, your income and expenditure statements, your trading statements. And these words are so big, it's so daunting to look at them all. But I think with looking at today's question, some of it would make a bit more sense. And then always, always, always just draw T accounts so that you can understand your debit and your credit. Okay, I think then I'm going to hand over to my colleague to start looking at required 1 and 2, and then I will follow at 3 and 4.
Okay, thank you, Nicolene. My name is Apiwa Mziwabango. I will be doing required number one and number 2 of exercise 16.1 and 16.2. But I just want before I go, I would like to go to the foundations, because I don't want to go alone without laying the principles first. For instance, I just want to explain to you. We are doing it is it's a non-profit organization, of which a non-profit organization can be defined as an entity which has the legitimate goal of furthering certain interests of the community. Its objective is not to distribute profits, of course. Then we have got some terms there. The income and expenditure statement, which will be part which I will also be doing, and which also have the receipts and payment statement when it comes to this study. This income and payment statement, which can be prepared in a T format where the actual receipts are entered on the debit side of the T account and the cash flow is on the credit side. Then when it comes to the income and expenditure, the income and expenditure is practically in a practical form. Its purpose is prepared according to the guidelines of IFRS, and it's intended to determine the surplus or profit. Just the differences between these two, ne? Because I will be going through the income statement, and and there will be principle that will be laid to what I will be saying, for instance. So let me show, for instance, the income and expenditure statement, which shows the total expenditure for the period, even if it is not received or paid. That's very important word, because it's you applying the accrual principle. If there's a difference, then on the receipts and payment statement, you only show the actual receipts and payments, but it's not part of the exercise that we're doing today. There is receipts and income. Then you also have on the income and expenditure statement, which indicate the results of the financial period transaction, but which showing a surplus. I already said that the receipts and payments shows the amount of cash on hand at the beginning of the year and at the end of the year, but does not indicate the surplus or deficit. Then receipts and payments of capital nature, they are not brought into the income and expenditure. That's your statement. That's more like your statement of comprehensive income, like she has shown at the beginning about those statements. And then when it comes to the income and payments statement, you only show your receipts and payment, which will also include those of capital in nature. Then the other thing, you also have your special funds, which a non-profit entity will put aside 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 money aside for a specific purpose, so that not all cash is spent on expenses that are of general that are general in nature. The special funds, they are established for these purposes, and they are usually accounted for separately from the accumulated funds. I think this principle here, it is applicable because we do have an account which indicated that. So we will apply that principle. Then we have the entrance fees. I just wanna also touch on the entrance fees. Entrance fees, they are payable by prospective members. When you enter, for instance, let's say you have a golf club. Before you enter, or you are a member of a professional association, before you enter that association, you need to pay the entrance fees. And then the policy of the club will determine what happens with their fee, those entrance fees. Sometimes part of their sometimes a certain part will be capitalized, and the rest will be used to cover running expenses. But the policy, will have to check what is the policy relating to this. When the additional information will always indicate that the part that needs to be capitalized will then be credited directly to accumulated surplus, and the rest will cover the running expenses. But in case it is not clearly indicated, you must capitalize it, take it to accumulated surplus. Then let's go to the question. Let's go to the question in question now. Um, I'm not going to. I will have to go through the question first, and then, so that I take you back to where is the everything is coming from. Ne? In the revision exercise, we are given where a summary of the financial information, which shows the statement of financial position as a 2021. That is now last year. That is the previous year's financial statement of financial position. That's number one. Number two, we have got cash transactions for the financial year. That is as at year end now, 2022, which shows receipts and payments. It shows receipts and payments. There we have visitors fee, and then we also have membership fees, and we also have the entrance fees. All those were the actual payments, and then championship entry fees, donation, and also the donation fees as well. Then we also have the payments, like as you can see, municipal taxes, refreshments, stational tennis, affiliations, championship expenses, honorarium, wages, and so on. Then we have additional information. Very important to read the additional information. This additional information, it determines how you take into account the amounts that are given, that when you are doing your calculation, or if you are doing the statement. There are certain things that you will need. It has got implication. You must always, when you given additional information, it's very important. You can't, that additional information is given for a reason. There is a reason why you need to take into account what is written there. For instance, the entrance fee must be capitalized. It is already said there. There is a meaning. There is a meaning why it is said there. There is a reason. Then we have inventory on hand as a 31st of December, which is tennis ball 420. There is an input. This will affect us. This will affect in how you determine some amounts in the financial statements. There is a reason why if these amounts are given. There will be an implication. And also refreshment of 72, rental of tennis courts, which is amounting to 480 per month, and then unpaid membership fees for 2021 are irrecoverable. Very important that word. But I will just explain. I will always be taking you back when I'm going through now to the solution. The why as to why the club has 48 members and membership fee amounting to 20 is the member pays 20 rand. We have 84 members. So on a monthly basis, the member is paying 20 rand per month. Stationery amounting to 120 was purchased on credit, and it was used during the year. That's also important. And then we have wages that are still outstanding. We did not pay the wages at the year end now of 360. Then I used equipment with a cost of 1,200 and accumulated depreciation of 960 at 31 December must be returned off. Okay. Also important information. Provision must be made.
Sorry to interject.
Yes, sir.
Miss
Mayra-san.
Can you put your slides on presentation mode?
Hi, Nicole. Can you put the presentation on a presentation mode on your site?
Yes, let me do that. Is this better?
Yes, I think that's what he's looking for. Thank you.
Okay.
Thank you
very much.
Okay. Then we have interest on the fixed deposits, which may only be used for championship expenses. The capital on the funds is not expendable. You see why I was also referring to the special funds. Principles relating to the special funds, they are triggered every time any information is being read. It triggers a principle. Now, our required is saying, prepare the following account and statements of Spring Tennis Club. The membership fee account for the year. I'm going to do that, and I will be doing the required number 2, the income and expenditure statement for the year. I already explained the principle. What is happening? What is happening? What is the income and expenditure? What is its purposes? Now let's go to it. That membership fee. That membership fee account. I will start with the opening balance of 192. We had accrued membership fees. If you could look at the arrow that is showing there, we had accrued membership fee of 192. What does that mean? Last year, some of them, not all of the members paid. That means that some of the members did not pay and they owe us money. Then we also had prepaid membership fees. Some members, they paid in advance, so that one is included. We owe those people. Okay. Then we have, if you look at the membership, this one income and expenditure, so it's the one that is going to go to income and expenditure. How did you determine it? It's said there in our, if you look at the additional information E, it's saying that the club has 84 members and membership fee is 20 rand. As you can see, the calculation is showing there. Okay, and then now, if you look at under receipts, you will find that how much did we receive membership fees? We receive membership fees of 120, 19,920, and we also had membership fees of 48. That one that's relating to that is 2023 is relating to the next year. Okay. And then the one relating to in the current year, which is 19,920. All right. Now we have credit losses. Of 72. How did we arrive there? If you look at it, we had 192 that was accrued to us. What does that mean? If you look at the additional information, number D, it says that unpaid membership fee for 2021 are irrecoverable. So what we only got paid, but in the current year, we only got paid 120. We were not paid, but what was unpaid, it was 192. So 192 minus 120 is a credit loss. Because it's a loss, it's not recoverable. No one is going to pay, will be able to pay that, will not receive it. Hence, it is a loss. Okay. Now we also have that balance accrued. If you look at that balance accrued, if you look at it, we had the fees that were paid in that were prepaid, were of 168, and also how much was actually received for the current year. It was 9,920. So 9,920 plus 168 is equal to, if you how much is 920 plus 920 plus 106, and then how much were we supposed to receive? How much we were supposed to receive? 20,160, then minus 19,920 minus what is also actual paid, which is 160. Then we have members owing us about 72 rand. And then also now, if you look at the 48, we have someone who already paid for next year now, which is 48. Then we have that 48. And then if you look at it, we'll have to balance that and take it forward too. And remember that balance is what is going to, it's gonna go, it's a credit. It's a payable. We owe those people, and it's gonna go to the balance sheet. I think I am done with that. With the membership fee account. Then let's go to the statement of income and expenditure. Then, if you look at it, we had membership fees. When I speak, I like to speak with what is in the additional information, and So we had the income. In order to get the income, we had visitors fee. If you look at the income on the receipts under number 2, we have visitors fee amounting to 4,860, and we also have membership fees as calculated above, and also that interest. The interest on the savings account, if you look at it, it's under there. Look at number 2, interest received savings account, 156. Okay. And then we have donations. They are given there under received donation of 4,680. Okay. Then the total income amounting to 29,000. If you add all of those amounts, they are all in that information that has been given, which is total income amounts to 29,856. Now let's go to expenses. Under expenses, if you look at, we are given municipal expenses. There's nothing that's given. There's nothing that's given relating to additional relating to municipal expenses. Therefore, we'll take them as it is. Remember, I said that, okay, this statement, we record it on accrual basis. We're not only considering cash. Okay. Then we have credit losses, as I explained up there. Credit losses of 72. It's 192 minus 120. I explained that last year our members that did not pay us an amount amounting to 192, and then we only receive 120 in the current year, and it is stated under the additional information that those unpaid there are irrecoverable, will not receive anything. Then it's a loss to us. Then we have refreshments. Then going back to the additional information, under the refreshments, we paid 100. We had 130 refreshments, but now the inventory of these refreshments that was not used. So you can't expend something that you did not use. That's an accrual. That's a principle of accrual. So you can only expense what you have used. Matching principle. That's what in accounting terms, the economic principle, the financial statement, they need to represent the economic principle as at year end, the economic events, what you used as at year end. That means now 1,800 minus 72 minus that 72 which has not been used. That is an expenditure amounting to 1,792. Then we go to stationery. Stationery, how much did we bought for stationery? We bought it for 1,000 to 1,512. Then if you look at additional information F, stationery amounting to 120, because that one was purchased for cash. Ne? Then under F, we have stationery amounting to 120 that was purchased on credit, and it was used during the year. So that one, it was purchased on credit. Remember, the statement represent accrual principle. So now this one was purchased on credit. Then what was purchased? We add that 120, because if you look at the financial information, the cash, it's only what was paid, which is 1,512, and then we add that 120 which was purchased on credit, and then we get to that amount of the stationery, which is 1,632. Then we have tennis balls. Tennis balls. I like now to go up. If you look at the statement of financial position, there is that inventory which was not used, because this was not used in the previous year. That is the opening balance of, we have an opening balance of 960 now, and then how much did we purchase? How much was bought of tennis ball that were purchased for cash? We had 5,200. I think it is even shown in the calculation in those brackets, that 500 5,982, which what was unused in last year. So in the current year, that we bring it forward, and then we add to that stationery how much. 5 with the one that was purchased in the current year for 5,208, and then we have same as for the same principle that I explained in refreshment. We had at year end an amount of for a tennis ball with an equivalent amount of 420, which was not used. So we take them out because it's not used. I'm referring to that economic principle, the matching principle, that because the financial statements, they need to represent the economic events at that point in time. So that is how we arrive at that 5,844. Then affiliation fees, they are given in under that the payments in that additional honorarium is also given. Then we go to wages now. Wages, if you look at the wages, if you look at, I'll start there in the balance sheet. There was an accrued wages in the previous year. That means that we owed wages. There were people that we did not pay last year. Ne? Now, if you look at payments, we paid wages amounting to 3,360. So we have paid. We have paid. But now, if you look at under additional information, now we still owing. Now at year end, we are owing wages of 360. So what happened? What is happening? What is happening? We need to determine that. Okay, now that we paid but now we were owing this one, that 72 was not the wage, is not an expense in the current year. That expense, a part of 360 includes 72, which is not an expense in the current year, so we need to take out the 72, which is not an expense for 2022, and then we add the accrual that is still owing of 306, and then we get to 3.648. Maintenance is given under the payments there. Rental expenses, if you look at the additional information, once again, rental of the tennis court is 480 times 12. That is how they determined it. Then let's go to depreciation. How did we determine that depreciation? We need to consider, in order to determine the depreciation, it's important that we consider everything. So if you look at additional information, if you look at the information, we have an equipment with a total cost of 21,600 with an accumulated depreciation of 880. And then we have paid, there was an equipment that was purchased in the current year, which it was purchased on the 30th of, under the last statement, if under payment, equipment purchased on 30th of September 2022, amounting to 2,400. Then we go to additional information under age. It's saying, under age, it's saying, used equipment with a cost of 1,200 and accumulated depreciation of 906 as at 31 December must be written off on the 1st of January. So now let's calculate our depreciation. I just read everything. That needs to be taken in order for us to calculate this depreciation. So to calculate the depreciation, first we need to take into account, okay, the balance was 21,600 for a cost, and then the accumulated depreciation was 8,880. If you look at that additional information, there was under age, we had to write off an equipment amounting to 1,200. So cost is gonna be 21,000 minus 1,200, and also the depreciation is gonna be 8,880 minus 960. Then we get to 20,400 and 7,900 920. Now we purchase it. We purchase another one of 2,400. So now how do we calculate that depreciation? Now we calculate the depreciation. It's on a diminishing balance. How did I get that? The provision must be made for depreciation plan on a diminishing balance. So now the calculation, now do we calculate that depreciation for that older, for the equipment that was not sold? It's 20,000 minus 7,920 times 20%. We get a depreciation of 2,406. We also purchase a new equipment of 2,400 on the 30th of September. So we depreciate our equipment. We're depreciating at 20%. And how many months did we use for the current year this depreciation? We use the depreciation from October, November, December. Then you need to times that depreciation by that you need to apportion it. These are it's the terms that you will be using for the rest of your doing accounting for as a course. So you apportion it for 3 months, 3 divided by 12 to get to a depreciation of 120. You add that depreciation to that depreciation of the equipment that was not sold, which amount to 2,496. Then the total depreciation amounts to 2,616. And also now, and also we have a loss which is 240 is 1,200 minus 960, which amounts to 440. Then we have a championship shortage. If you look at this one now, I just want if you look at this is the special funds. This is a special fund account. Ne? I'm just gonna go before I go to how is it calculated? How is it calculated? Ne? The fund account, if you look at the information in the Excel, the fund account must be created with investment. Should the income from the investment be greater than the expenses involved, the balance will be shown in the statement of financial position under the heading special fund, except obviously the fund may incur more expenses. This is in your material under page 6. Ne? Obviously, a fund may not incur more than the balance of the expendable portion thereof. Should the income from the fund be insufficient to pay for all the relevant expenses, the organization will have to find alternative means to finance the expenses. What does this mean? This means that there's anything where the expenses of that particular fund are more than the income, then those that shortfall, it will have to come to the income and expenses. So then how did we determine that championship shortage? Okay. So if you look at the additional information now under payments, there's championship expenses of 6,400, ne? And then we also have entrance fees under entrance fee of the championship. The championship entry fees, how much do we have? They must cover these. They must be covered there. Then we also have the championship fees of 3,240. Those are the entry fees. They need to be capitalized under the championship. And then we have the interest on that. Okay. If you look at this additional information here, the interest on a fixed deposit of a trademark, that is additional information J. The interest on the fixed deposit at trademark may only be used for championship expenses. The capital of the special fund is not is not expendable. That means that now in all the expenses of the championship they need to be the championship, the interest on the fixed deposit may only be used for championship expenses. So we can only take it to those expenses. So then, how much was the income? How much was the total income? The total income for the championship is 3,200. The entry fees and also 3,072. In total, the income is 6,312. However, the expenses now are 6,400, which is more than the income. Now the shortage, it needs to come. There is a shortage which needs to come to the under income and expenses, which is 888. It's 88. It's 6,400 minus 6,312. 6,312 is the income, and 6,400 are the expenses, which means there is a shortage, which we take it to our income and expenses. Then we have a deficit of 508, which is income of 29,000 minus 30,364. We get a deficit for the year of 508. Thank you. Mr. Maritani, you will say if we take questions now or we wait for Nicolene to take her parts. Thank you. I'm done on my side.
I don't know. I think I'll hear from you and Nicolene. What do you prefer? Do you want to take questions for your part now or later? I mean, you can decide. I have no problem with that.
Nicole?
Let's take yours now, if possible. Then we finish with part 1 and 2, and then we continue to 3 and 4. And after mine, then we ask additional questions on those last 2 required sections.
Okay. Any questions, colleagues, students?
I think I'm seeing one here in the communication. I see it has been answered, the 192. I think it was answered already. Okay. I don't see any further questions in the chat. So let's continue then to section 3 and 4. So section 3 was then to prepare your statement of financial position for the year ending 31 December 22. What I've tried to do is try to highlight you all the bits and pieces that's given to you in the additional information or in your cash receipts and payments statement, and how that all fits into you preparing your statement of financial position. So the colors are just there to illustrate to you where do we actually get all these numbers from. So I think if I then start your statement of financial position is then split between your total assets and your total fund and liabilities. Your funds are like your equity accounts. And that obviously just needs to balance. So like the principle that I explained in the beginning, your assets is equal to your equity plus liability. And you can see it here that the 53,404 is equal to the same as your equity plus your liabilities. So if we start with property, plant and equipment, that's also your required 4, which is your which was to prepare the note for the property, plant and equipment. So maybe I'm going to stay on this note quickly and do required 4 because this will fit into your statement of financial position. So on your note, it's important that you always start with your carrying amount at the beginning of the year, and that should be split between your cost price, so what did you actually pay for your property, plant and equipment, and then also your accumulated depreciation. I've seen 1 or 2 students on my sites on Unisa or even on the WhatsApp chat asking, what does depreciation mean? How I make sense of it is, if I had my own company and I had a little bus delivering all my biscuits to some destination, the the lifetime of that asset is normally like 5 years. So you will depreciate that asset over the 5 years then. So 20% each year. So there's different ways of depreciating your assets. You can either do it on your cost price or diminishing method, which I think was in this section, the method to calculate depreciation. So you always start with your beginning balances split into cost price and accumulated depreciation. Then you have some additions during the financial year. You might have sold some things, and you have then your depreciation for the current year, and then you get your closing balance. And your closing balance again is split between cost price and accumulated depreciation. So the opening balance here, your cost price, the 21,600, was directly from the information provided as at 31 December 21. There is the 21,600 and also your accumulated depreciation. So these are your opening balances, equating to the 12,720. Then in your cash receipts and payment statement, they said equipment was purchased on 30 September. Watch out for dates, because dates determine when you start depreciating your assets. So because this one is bought on the 30th of September, you only have 3 months left for that financial year to depreciate that asset. So your additions would then be the 2,400, which was given to us. They also said then in the information that you used equipment with a cost price of 1,200 and accumulated depreciation of 960 at the beginning of the year. And that must be written off as from the beginning of this financial year. So the carrying amount at the beginning of this year for this asset was then 1,200, 960, you're writing off that 240. That's what we saw earlier also in your income statement. So that's then written off. Now, an important note to make is if you sell an asset or if you write it off, you also stop depreciating that asset. So because this one was done at the beginning of the year already, you don't have to calculate depreciation on this for the full year. So then they also said in the additional information that your provision must be made for depreciation on equipment at 20% per annum on the diminished balance. What that means is you basically just take your opening carrying amount times 20%. So you start with that. So that's the first component, how you're now going to calculate this depreciation balance here, this 2,616. You start by saying 12,720 times 20%. Then they also said you bought those assets for 2,400. So you're going to take that times 20% times 3 divided by 12. And I think that was 120 Rand. So then if you take your 12,720 less this that you wrote off times 20%, that is 2,496. So the 2,496 plus the 120 gives you your depreciation of 2,616. And then if you then get to your end of your note here, your cost price is then basically 21,600 plus 2,400 less 1,200. Your accumulated depreciation at the end of the financial year is your 8,880 less 960 plus the 2,616 Rand. And that gives you your closing carrying amount end of the financial year for equipment of 12,264. All your notes needs to tie back to what you present in your statement of financial position. So if I go then back to required 3 to prepare our statement of financial position, that note's number is populated there. So then if I go to financial assets, your fixed deposit account, I think that was just provided in the information, if I remember correctly. Yeah, they gave it to us at the beginning of the financial year, 25,600. Then if we go into current assets, they've also given to us what was your stock on hand end of the financial year for tennis balls and refreshments. That's 420 plus 72, and that gives us the 492. Your trade and other receivables, the 72 was given to us in the required 1 section where your membership fees was accrued. Then the 512 is your accrued interest for the year, and they've given us interest receivable for the year is the 3,072. We received interest of 3,584, less your accrued interest at the beginning of the year. So then your accrued interest receivable at the end of the year is 512. And the sum of those two then gives us the 584. Then if we go to the cash and cash equivalents, again, the 3,960 is your savings account balance. I think they've given us the 2,880 plus additional deposit is 1,080. That's 3,960. Then we also have the normal bank balance, which is 8,400 plus your receipts from your cash receipts and payment statement, less your payments, 368, sorry, and that gives us the 10,504. And the sum of these two blue items is then 14,464. Now, how we get to the 53,404 is your 37,864, your non-current assets total, plus your current assets of 15,540. Okay, then if we now go to your funds and liabilities section, let's start with your accumulated funds. I see this one something similar. Some of you might have heard the word retained income. It's all the same thing. It's an equity account, and that's basically where you bring in your accumulated profits over the years. So you start with your balance at the beginning of the year, which was given to us, 26,440. You add your entrance fees of 864, and then your shortage for the year was 508, and I think that was from your income and expenditure statement. At the bottom you can see there was a deficit, the 508. That wasn't required too. Okay, so then we get to a total of 26,796. The special funds they've given to us, which is the 25,600. And then if we go to current liabilities is the 120. Just want to see, well, that was the stationery bought on credit. That was in your additional information given, number F. And then they also say there's wages still outstanding, so we owe someone that. That's the 360. So you take your 120 plus the 360. And then the 480, just want to see, that's your accrued rental expense. So you still need to pay for your rent for this year. Your payable amount is then the 480, which was given to us in the question, times 12, less what you paid. And then you also had an amount prepaid at the beginning of, at the end of the prior year, which was 480. So then your credit that you still need to pay for rental expenses is 480, and that's added there. And then your income received in advance is the 48. That was from section 1. That was this balance received in advance, your membership fees. And then again, we just sum your total funds, the 52,396 plus the 1,008, and that gives us the 53,404 total funds and liabilities, and those two then balance. I think that was all then from my side. So because I covered the note, which was section 4, And then section 3 was your statement of financial position. And that's the end of our session. Do we have any questions? I see we have a hand up from Vandile.
Good evening, ma'am. How are you?
Oh, good. Thanks. And you, Vandile?
I'm good too. Yes. So, ma'am, I'm actually having a hard time grasping the whole concept of the special fund and how it was tied with the championship expenses and whatnot.
I think that if I'm gonna hand over back to my colleague on the championships because I think he explained it quite nicely earlier. If you don't mind.
Okay, no problem at all, ma'am. Thank you.
Yeah, pleasure. Is he still online here? I can't see his name now.
I'm not sure if he's muted. Apiwe, maybe he's having network challenges. I'm not sure.
I just quickly send him a WhatsApp. I think we have another question also. How do you get to the 240 under disposals for the carrying amount? So that would just be your, let me just go back to the additional information required. So that would be the 1,200 less 960. So that was given in section 8. I hope that answers the disposal question. Can you also go through the calculation of depreciation? Connection issues at UNISA Wi-Fi for depreciation. Okay, depreciation. I've done the calc here at the bottom of the slide, this block in blue, to show you how to get to the depreciation of 2,660. So my first approach would be to go to your information provided. Um, just want to reply to my colleague here. And so the depreciation, you basically start with what do they tell you about how to write, how do you depreciate your asset? So they've given it to us in section I to say that you write it off 20% per annum on the diminished balance, okay? So but they also said you bought some equipment during the year, you've written off some equipment. So my first step at this would be to say, okay, let's take so diminishing balance mean you take your carrying amount at the beginning of the year and you times that by the percentage that they gave you. That's how you calculate it when it's diminishing balance. So you take 12,720. But then they also told us you've sold or you've written off assets at the beginning of this year, and that amount was 240. So you then say 12,720 less the 240 times 20%. And that's the total of 2,496. Then they said you've also bought some new equipment of 2,400. So the 2,400 would be there only for 3 months of the year because you bought it end of September. So it would be October, November, December. So you say 2,400 times 20% times 3 divided by 12. And the sum of those two numbers then gives you your 2,616 Rand. I hope that answers your question. Someone is saying, if I send a question on assignment 4, a PPE question on assignment 4, can we do that? Yeah, I would think you need to ask your e-tutor for assistance, please, because I haven't prepared for that. I don't know in which group you are, but I think yeah. And then someone is saying it's accrued interest. I'm lost on the 72 of accrued income. Okay, let's go to 72 of accrued income. Oh, so this 72.
Hi, Nicole, can I check that one?
Yeah, sure.
Yeah. Which the
So
accrued
they're
income.
asking about the 72, yeah, accrued income in your membership fees account.
Oh, that one. Okay, okay. That
I'll take
accrued
it.
Sorry?
I'll take it if you don't, if you want,
No, it's
don't,
fine.
if you
It's
can't.
fine.
Okay,
Okay.
perfect.
Okay. If you look at the membership fees, how much was paid, ne? Like I explained, I was explaining. Let me just do the calculation as I am explaining, ne? The
So it's
membership
also here
fee.
on the screen in this little blue block here at the bottom.
Yeah.
I made them.
Yes, yes, yes. In order to get to that, how much was paid, versus how much was supposed to be paid, ne? How much was supposed to be paid is 20,106, and how much was paid is 19,920 plus the prepaid of 168. So we have 20,088 that was actually paid. Then you subtract that to 20,160 that was supposed to be paid, and then we get a 72. This means that not all the money that was supposed to be paid was paid. So we have got an accrued income. It's what is an accrued? It means that people that were supposed to pay, they did not pay, so they owe us.
I think that was well explained. Thank you. Do we have any further questions, perhaps? I see we have a hand up here.
That we answered that 168.
I think Wandile, your hand was up. I don't know. I think your question was maybe also, I don't know if we've answered it yet. I think it was on required 1 and 2, maybe, if I remember correctly.
Yes, ma'am, it was.
Okay, then I'll hand over to my colleague on that. I think it was on the was it on the championship fees?
Yes, on the special special fund and
So what
the
was your
championship.
question specifically on the special fund for championships?
Basically, I'm having a hard time to grasp the concepts of the special fund, and also I see here on the additional information J, the interest on the fixed deposit at Trade Bank that was only supposed to be used for championship expenses, and the capital amount being the capital amount of the special fund is not expendable. So I wanted to ask basically, because I saw here they also said that we would also capitalize the entrance fees, and when Sir explained it, I think I hadn't actually logged on.
Okay, no, it's fine. Let me
Okay.
The championship is the championship entry fee. Those are the entry fees, ne? So that's an income. That's an income. It's not like, I think the word capitalize, I think that one was a bit off. I apologize because it's not it's not like those entry fees like they will be used for something capital, ne? That, and if you look at those championship fees, then you need to match it to the expenses, those expenses. Then we also have those championship expenses. So, and also it's also said there, it's also said under and it's also said under that um it's also said that the interest will be used to fund the expense, the interest relating to that that fund, that those funds, they will be used to fund those expenses. So in order to calculate, in order to go and calculate that, you had to go and calculate how much were the entry fees, and also how much was the interest that was used to fund the entry fees expense, the entry expenses, of which is now we calculated the interest to be by taking 25,000 of the capital amount of the fund, which is 25,600 times 12%. We got to 3,072. And then the entry fee is relating to championship as well. The entry fees, of course, they will be used to fund the championship expenses. That's basically what that's basically the policy. They are used to fund those championship expenses. Then we get to the 3,200. The 3,240 is also already given in the addition in that under the receipts, and we also get add the interest there. We get to in total, those the interest and the entry fees, they amount to 6,312. And then we have those expenses, which are 6,400. They are more than the income that is used to fund the expenses. Income that is funding the championship expenses is less than the income that is used to fund the expenses, less than the expenses. That's why that at the end of the day, that shortage, it needs to go to the income and expenses income and expenses statement. I think you can add, Nicole, if maybe you
Yeah, I
think I've
think you
not covered
explained it
everything.
well. Please explain how we got to the accumulated fund. Okay, so let me just go back there. I'll take that one. So the accumulated fund, again, they've given us the balance, the opening balance, the 26,440. You just add your entrance fees of 864. Less your shortage. See the shortage as the sum of your income and expenses for the year. That 508 is directly from your income and expenditure statement. There you can see it. There's 508. So then that plus your 864 plus the 2644 gives us the 26796, which is your accumulated fund. See that as retained income. I don't know if that word maybe explains it better. It's basically just accumulation of all your profits over the years. Yeah, the shortage for the year comes from your income and expense statement, which is prepared and which was your required number 2. I hope that explains it, Jana. is the balance income received in advance. We've explained how we calculated the 72 accrued income just now. So that would be on the recording as well. My colleague explained it. The 48 you will also see is part of required 1, which is your membership fees account. So the 48 is basically your income that you've received in advance for next year. And that's because we're ending 31 December 22, the amount that you've received already for next year's membership fees was 48. And that was in your cash receipts and payments information provided. That's 48, the blue circle here that I'm highlighting there. That's where you get that income received in advance from. I don't know if there's any more questions. And I hope this class explained some of the principles better and that it helped. Yeah.
Doesn't look like there are any more questions. I think Apio and Nicolini can adjourn the class, if that is the right term.
Thank you
Because
so much.
we are done, and they will be able to access the recording to revise
Yes.
on that. Thank you very
Perfect.
much. I think I
Thank you
appreciate
so
your
much.
time.
Have a good weekend and evening.
Thank
Goodbye.
you.
Thank
Bye-bye.
you. Bye.
Thank you.
Bye bye,
Bye.
Bye.
Bye.